You made it on time. Great. All right. But while you guys are here, make sure that you are grabbing your heart me. All right. I do have the super fan thing going on as if it's just something that's happening, lately. Like all of the live hosts that are here, thank you for the heart me. We're trying to figure out ways to give you guys quality education, and the super fan it actually forces us to give you guys quality education. Because if you're going to pay that nine, I guess I couldn't say that. Y'all didn't see it, but it kind of bleeped me out. But if you guys are going to do that super fan, then we have to give you guys quality education. So what I'm going to do is I'm going to try to give you guys a super fan live at least 2 times a week. So this week, I'm probably going to do it on Sunday. And then next week, I'm normally going to do it on Thursdays and Sundays, but this week I'm going to do it on Sunday and then maybe Wednesday because I'm going out of town. All right, so I won't be able to do it for you guys next Sunday. I might not even be able to go live next weekend. So we'll see how my schedule is and if I'm able to set up my studio at my location. But I'm going to try to give you guys two Superfan lives a week where in the evenings, I'm going to give you guys education before these sessions. So they will be like either from 4 to 6 or 5 to 6. Open up the room 3 times a week live so that you guys can come on, interact with each other, be able to rub elbows with other individuals so that you can talk and interact with other traders that are trading the market at that time. My futures traders will be in there. My options traders will be in there. My stock traders will be in there because there's a lot of people in this particular community. I'm going to teach you guys how to do all three. If you've been afraid to day trade, you're not going to be afraid in this room because you're going to take your first day trade. If you're afraid to buy a stock, not in this room, you're going to learn or you're going to buy your first stock while you're involved in this particular room. If you're afraid to buy something and swing trade and sell it 3 or 4 months from now, not in this room, we're going to take the fear out of buying the market. Guys, these are skill sets that you have to have. These are skill sets that you have to have if you're trying to become financially secure. Okay? Most of us don't know how to take a dollar and make another dollar with it or take a dollar and make 10 cents with it. And I'm teaching you guys how to do it. This is the perfect place to do it because you can use as little as a dollar to invest in the market so that you can educate yourself. And then when you get comfortable with putting more into the market, then you're able to. Hey, thank you for the rising star. Was that Jim Babe? Jim Babe, thank you for that. Journey with Margosha, thank you for the Go Populars. Hey, thank you for the rising star again. For you guys that don't know, every live host that comes on, we're going to have what we call a goal box. It's usually somewhere around here. All right. The goals, I keep it real simple. Some people bring out the 3 goals and then you go in there and you can't figure out which one you want to help with. So I just keep it. Everything I do is about keeping it simple. All right. All right. I said something wrong again. All right. So I'm going to have to really be careful about what I say. But when you go up to this bestie box right here, I always tell people that Ugh, I hate losers. Bottom of your screen. When you click that, you're going to see the exclusive tab. When you click the exclusive tab, you're going to see the Go Populars under there. That's going to give you guys visibility on the screen, like Lisa Sutton right now is pushing those Go Populars. That's going to help the room get out. C. Spooner also put out a Go Popular. It's a very inexpensive way to be able to help the room. Another way is grabbing this Heart Me. All right. Now, y'all know that the first 15 minutes, we have to wait for all of our late people to get to the room. Because, guys, believe it or not, I don't like explaining things more than once. And usually they'll come in 15, 20 minutes late and then they'll ask questions. And I want to get to everybody's questions so that I can answer it, but I don't like to backtrack, right? That's why you got to, try to be here on time because I start at 6 o'clock. I know I'm not like most hosts. I'm literally looking at the clock, and the minute that bad boy hits 6 o'clock, I go live. All right, I don't know. That's just something. Everybody has that thing. I'm just on time for everything. All right, you can always count on me to be there when I need to be there. So if I'm not there, it's because I don't want to be there, not because I'm running late. All right, I'm really, really good on time. But let's talk about today's topic. Today's topic is losers. All right. If you're in the market and if all right, I can't even say the LOSERS word. They gonna shut down this live. All right, so we're gonna look at what's another word for LOSER list. We're gonna look at my stocks that didn't perform like I thought they were going to perform, and I'm gonna give you my top 10 unperformers. Since I can't say this word, because every time I say the word, TikTok sends me a warning. If I get too many warnings, they're gonna shut down this session. All right. Yeah. It's TikTok has been as soon as they switched it over to the American algorithm, it's been real glitchy and it's been catching all of us if we say the incorrect thing. So I'm new on the platform. Calls over the last 10 years. If you've ever come into the market and you bought anything, I wonder if I can even say bought. Yeah, if you purchased, bought is probably better than purchase. But if you were to buy anything in the market, you're gonna have moments where you get what we call LOSERS, right? You're gonna have to take a loss. Okay. And when you take those losses, it doesn't mean that there's something wrong with you. It doesn't mean that you're a horrible investor. Doesn't mean that you're a horrible trader. It just comes with the business. Business, guys, is all about how you operate in every circumstance. How do you operate even at your worst when your company is making bad decisions? Is that company going to be able to withstand some of those bad decisions when you go through cyclical moments in the market? So I haven't been using this term a lot, but when I was driving to North Carolina to go see my brother, Kramer had a show on and he was talking about secular and cyclical companies. Now, I don't like using the stock market terms that I hear every day because I'm trying to be a little bit different. But cyclical are just companies that go up or go down during certain time frames, right? So commodities sometimes are cyclical because we go on vacations the most during the summertime and during the holidays, right? So a lot of the times you will see cyclically those particular companies or commodities start to increase in value before the summer or before the holidays. Excuse me. All right. So, secular companies are companies that are able to withstand a lot of, what's going on. So there are just going to be times where the company that you're buying just might be a cyclical company and it's just not doing well. Buying just might be a cyclical company and it's just not doing well. Because they're high speculation companies, meaning that you know they have high beta where they can go up or down. A lot of the times they only do well when the market is doing well, and when the market is not doing well, those are the first companies to sell off. All right, so at one point, cryptocurrency were those types of companies. All right, so we're going to talk about a lot of the companies. So if you've been in the market for over a decade, it's almost impossible to go through a whole decade, especially if you're recommending companies and not have one that fails you. Okay, so I'm going to go through my list. And it's kind of funny. I laugh at it now because, of course, y'all see that I'm still trading to this day. I had a very good, uh, the last the last 5 years, ever since COVID, the market's been up 20 something percent each year, outside of 2022. So I've been doing extremely well in the market. Yeah, they hating. I don't know what is going on today, but it's not just this room. If you guys are in any other rooms where there's a lot of engagement going on, you're gonna see this happening. All right. So if you're sitting on a LOSER, go ahead and put what that company is in the comment section. What stock is in your portfolio that's giving you the business right now that you're just really frustrated with? And maybe you want me to look at it to see if it's time to cut that zero or stick with that particular company. So if there is a company that's giving you the business before we start talking about my list, go ahead and put it in the comments section for me because I need my engagement going, because the most embarrassing thing for a live host to have done is when the TikTok universe comes on and tells you that you're not interacting enough. And then you got to put a puzzle together to see if you're even engaging. I just got a warning again. All right, so I got to be really, really careful today. I don't know what I said to flag this room, but I'm getting every other sentence. It's shutting me off. So I'm gonna try to be as careful as possible. So I see a couple of companies. I see Ford. And Ford, guys, has been going down. Ford has been going down for 20 years. I don't know if you guys know this or not, but Ford has been going down for 20 years. All right. Marcus says NVIDIA. I don't know how that's possible unless you're trading NVIDIA. But, maybe you just got into NVIDIA. Maybe it's your first stock that you've ever bought. And then all of a sudden it's starting to go against you. Guys, that's normal. Do y'all know that just about every stock I ever buy, it's usually down like 90 something percent before it starts to go up? Like, I rarely can catch the lows of a company. So I have a secret way of getting into those particular companies. I don't put all my eggs in one basket at one time. Let's say I have 100 and I want to put it into the market. I might not use the whole 100. I might use 50 and get into the market, wait a couple of days, and then I'll use the other 50 to buy my other position. Or I might wait weeks. Now that's called dollar cost averaging into a company. But a lot of the times there is no set way that I do it. Now, some of you guys have a little bit of OCD when it comes to when you're entering and exiting a lot of companies. So that's something that you're going to have to, work through consistently. But I'm real flexible. Like, I'll have a time frame that I'm buying. So if I see something that I like, my initial buy is always 25 to maybe 50% of what I'm going to put into it, depending on how I feel. because I know I'm going to get the other 25 or 50% in at some point. And the worst case scenario is that I buy it. I try to wait a week to put the other 50% in, and then it just rises like, it just keeps on rising and rising and rising and then that investment ends up becoming a trade. And that's a good thing. So I see Ford, I see Nvidia. Christina N said she had to get out of CMG. So CMG is Chipotle. So CMG did really, really, really well. And then all of a sudden this year, guys, a lot of restaurant companies got hit this year. It's not because of you. All right. Thank you for the who just sent that. Thank you for the thank you, Real Dookie. I appreciate that. What's some other companies? I see QuantumScape. QuantumScape is one. Yeah, QuantumScape got a lot of people. Raymond says Lyft is giving him the business. He's like, Lyft gonna need to start lifting soon, or I'm gonna have to, Lyft's gonna have to bounce. I get it. Guys, a lot of these companies, look, I was buying. Oh, here's a real good one. Ooh, I really feel for you, Denny, being in that Plug Power. All right, we got Plug Power. Miss Dante said Path. I don't know what Path is. What is Path? Path. You got to tell me what Path actually is. CK Max says O. All right. So if some of these are, a lot of us are sitting in the same companies, and there's nothing wrong with being in, and I mean, this is Realty Income, but yeah, it's painful. It's painful to sit in a lot of these particular companies. But what you're going to do in the future, guys, I'm just making sure I got everybody's stock. QBTS. Okay, so this is a quantum stock. Lapman says QBTS is one that's giving him the business. Okay, so yeah, it's not uncommon to be in a company that's going down in value, and you're like, what the heck is going on? Now, here's the thing: if you're trading the stock market. Meaning you're buying something and you're selling it within a 12-month period, and then you're trying to buy it on a catalyst. A catalyst means that before you even buy that particular stock, you should already have a goal, or there should be a catalyst. There should be a moment. Like, are you trading it because of earnings? Are you trading it because it's going to hit a resistance area? Are you trading it to get a certain percentage out of it? Are you trading it to get, because you're looking at the market cap to get to a certain number? Traders are more goal oriented than investors. Investors are like, look, we know life happens. We know things happen. We know presidents tweet. We know pandemics come. We know every now and then a president might get impeached. Right. We know that another country might start going through a financial crisis that will affect us because maybe we buy a lot of products from them, like a China. Right. So we know that there are things that we can't really predict to happen. So investors are a little bit more flexible because they have time. They're like, you know what? Pandemic happened. And y'all know, like, within 3 or 4 months, stocks were already back at their regular prices after the pandemic happened. Pandemic happened in March of 2020. By June or July, stock prices were already back to normal. It didn't feel like it because we were like, oh my God, the world's coming to an end. But in 3 or 4 months, the stock market was right back where it started. Okay. And that's why reading charts is going to help you guys understand this, right? This is why reading charts is something that you have to add to the fundamentals of the market. All right. You got to add the technical side and you have to add the fundamental side. Right. So we're going to get to mine. Right. We're going to get to some of my stocks. So over the last 10 years, a whole lot has happened during that particular time. But what I want you guys to understand that a lot of these investments that I had to give it a little bit of time, at least maybe a year, just to see if it could withstand a year. And that's usually what I do. If I get in something, and especially if I'm giving it a full year, and if in a full year, the price that I bought it at, it's not at least a penny higher and it's bullish, more than likely I'm going to get out of that company, even if I feel like it's going to turn around. And I want you guys to start adopting that type of strategy as well. It's going to make you have to be a little bit more active in your accounts, but it's going to protect you. Now, what I don't want you guys to do is to buy something for a trade. It starts to lose. You don't want to take a loss on it. And then all of a sudden that trade becomes an investment. Never let a trade turn into an investment. So many of you guys, including myself, do this all the time. You have the catalyst, you have your goal. I've seen you guys day trade and turn a day trade into a 4-year investment. It's just like, hey, I'm just going to go and date this person. And then, well, I don't want to go there. I don't want to bring relationships into this, but y'all know where I'm going with it. All right. So, yeah, it's interesting that a lot of the times you don't sell because you don't want to. And it's interesting because you're already exhibiting the pain. Most of you guys can't even go to sleep at night because the stocks are losing so bad. But for some odd reason, you feel like selling it is more painful than going through it. Believe me, once you sell it, you all of a sudden get this feeling of relief. When I sell a LOSER, I almost immediately get gratification. I don't even mind that it goes up in price. Like AMD, I had been losing in AMD for about 6 months. Soon as I sold it, I immediately felt better, even though it turned around and did exactly what I thought it was going to do the year prior. But I had to stick to my guns. All right. But things happen, guys. And people like myself, if we want to be called gurus, or if you give us the guru level, the guru label, there's going to be your haters out there that come in here for the first time. They're going to hear a recommendation that I give. I just talked about silver recently. Y'all know the very next day silver dropped. I put out a post on silver to show you guys my receipts. Now silver just exploded in price to the upside. Right? The options market were up. The options market was up like 1,000% in one day. I'll show you guys what it did today also. You guys just got to remind me in the comment section. So what do most people do? They see me make money and then they think they gonna make money the very next day without learning any strategy about why Joel got in. See, Joel got in and been telling everybody about his investment in silver over a couple of weeks. And then, when I kind of felt like it was probably about to explode in price, I'm going to always show you guys, hey, look at what's happening. Especially when I hit that 100% mark. Usually when my stock hits 100%, I'm going to show you guys the receipt. I'm not going to show you at 20 and 30 and 40 because I'll be showing you guys stuff all the time. There's just different marks. Silver hit my 100% mark. I showed you guys my receipts. If you believe you are going to make 100% that day, you're being unrealistic. So somebody probably bought silver. They were down 10% the next day. They probably bought an option. They sold it. They're immediately going to attach that loss to me. They're going to say it was Joel's fault. Because I didn't have to come into that live and he was talking about silver and then I didn't do my due diligence and I didn't study and I didn't look at my charts and I trusted him because he made his money. And now there's sour grapes because not only is he up 100%, I'm down 15 or 20%. So you know what I'm going to start doing? I'm just going to start creating a list of all the terrible stocks Joel has ever given me over the years. Because this is what they do on a daily basis. They come in, they don't do their homework. They buy it just because they see you're up. They lose, and now it's your fault. I've seen YouTube videos time after time where these gurus are recommending different companies, and all people tend to do is lean in on the negative. I see you guys doing it with Cramer all the time. It's interesting to me how he got labeled the guy that gives out like bad stock advice. Like it's interesting to me where that even came from. Because I've been watching that cat since 2007 or 8. When he yells and tells everybody to get their money out of the market because the market was probably about to crash, and then the market did crash. They don't give him props for that. Then when the market turned around, he was like, hey, let's get into the market. Now, mind you, he's on TV because he earned a 30% return for like 20 years for his hedge funds. 30% a year is crazy. But people only remember the negative. He's on TV. I'm not on TV. I'm not doing my homework. I was listening to a lightning round where he was just saying buy, sell, buy, sell, buy, sell. You decided to put all of your money in that particular company. You lose, and now he's the bad guy because he's on TV and he's a millionaire, and you're trying to get there. I'm here to tell you that there are going to be times that you're going to be wrong. And it doesn't mean that you're terrible or horrible. But as I get older, I like to look at the full picture. I listen to Cramer every night. He's one of the best educators I've ever seen come on TV. Like night after night, he's educating you guys on the market. In fact, he does kind of what I'm doing. The only difference is maybe he's older, a different race. He has real CEOs come on. He's actually more legitimate. But he gets so much hate. And the hate comes from you guys because you won't do your due diligence. I know all of the great things he told you guys to buy. The Bitcoins. He came up with the Mag 7 or the Mag 5 or whatever that's called. Like the top 5 companies that made like the most money in history. He came up with that acronym for y'all. So you'll know what to invest in. But y'all focus solely on 1 or 2 companies that didn't make money over a 3-month period. He told you to get in NVIDIA back in 2016, 2017. When he named his dog NVIDIA, he bought Bitcoin. How many personalities you know are on live TV that's saying, I believe in what Jamie Dimon and them are saying, but I'm buying this too. I'm buying it. And then when he got out, I'm selling it. But when you focus too much on the negative, you can't make money in the market because of your fear of the market. Because see, if you learn how to look at charts and you take those stocks that they're talking about and you go back and you look at the history, you would say, oh, maybe I won't buy this now. Or you're going to learn he's telling you to buy it over a certain amount of time, but you might be a day trader. He's talking to investors for 10 or 15 year investments. You already mad 3 months later, not 3 years later. That's why I'm trying to make sure that you guys understand the language. You guys understand investing versus trading versus intraday trading. So you know who you're talking to. So you know how to create that goal that you want. So that you realize that there's 3 different brains when it comes to the market. There's not one way, one brain, one way you come into the market. There's a way to get to millions, and it's not to just come in and do options all day long. You got to be able to put in the basic foundation so it will allow you to be able to capitalize on this stock or that stock or this stock. so that you can come on one day and be like, and laugh at all the losers you had over the years. And those losers didn't make you get out of the stock game. See, a lot of you guys, if you lose one time, you're done. You can't afford to lose because you're like, well, if I lose, that's it. I can't trade or invest ever again in the history of my life. And I'm like, you're not positioned correctly. So let's get to these stocks, right? So let's talk about my top 10 crappy calls. See, I can talk about myself and some of the worst calls I've made because because you guys have seen the full picture. If I buy 10 stocks, 2 of them ain't gonna act right. If I flip 10 properties, 4 of them probably ain't gonna work out the way that I want them to work out. But it's not gonna stop me from being able to do real estate. All right, and I want you guys to learn that. That's that millionaire mindset. Putting yourself in position where if you do fail or if you do lose, it's not gonna kill your portfolio. It's not gonna kill your momentum. The TikTok people that are on here know that. We have these things called frags. And we try to get as many frags as we can so that if we have to take days off like I did last week, it's not going to affect my momentum. I'm not going backwards. I'll just stay right where I am, even if I miss a day or miss 2 days or miss 7 days. That's for my live hosts. All right, so let's talk about my list. So starting out here, right? Chinese stocks. I don't know if you guys know this, but you can invest in other stocks that are in other countries. Now, hold up. Let me go ahead and change out my mic also. I forgot to do that in the beginning. Let me change out this mic.
1 2 1 2 1 2. Okay, it's working. Great. Yeah, it was Fang. I forgot the name of it. Yeah. Kramer came up with the word Fang. A lot of you guys didn't even know that. It stood for Facebook, Amazon, Netflix, and Google. Or maybe it was FB, Apple, Netflix, and Google. And then he came up with the other one too, which was it MAGA? I know it was like 6 or 7. Oh, it was FAANG. It was Fang. Yeah, there you go, Nick. It was 5. I remember that. It was actually FAANG. Kramer came up with that, people. One of the most famous acronyms ever created in the history of the stock market. And I'm like, do y'all know what those 5 companies were? Do y'all know what those 5 companies did in the last 15 years? FB, Apple, Amazon, Netflix, and Google. And then I think they were taking out the N and they were putting NVIDIA in place of Netflix. They were swapping them out. All right, Raymond told me to make sure I say my disclaimer. All right, so before I even start and look at my particular companies, my name is Joel Harrison. I'm an expert in stocks, options, futures, and a little bit of cryptocurrency. Thank you for the heart me. I have over 10 years and over 30,000 hours of trading and investing experience. And anything that I talk about today are going to be the opinions with a big old O, are going to be the opinions of Joel Harrison. And I appreciate the hearts. We're already tapped out to about 50,000 taps in 40 minutes. Oh, thank you for the whale. Thank you for the whale. I love, like, if you're on this particular platform and you see all of these things happening on the screen, those are people supporting the live. If you can't support, that's fine. You should never feel obligated to support for the live host. But my thing is, thank you, Denny Tyler. Thing is, if you're gonna be in here for 2 hours with me, like, can you get like 10 claps? Maybe a couple of go populars, maybe grab that heart me, and then I'll be all right, right? 100 people, with 100 go populars, like that can really do some things for the room. All right, wink, wink. But let's talk about the Chinese stocks. So most people don't know that they can invest in Chinese stocks. Some of my favorite Chinese stocks are going to be Baidu, which is the Chinese Google. You also have NIO, which is the Chinese Tesla. You also have Alibaba, and a lot of you guys use Alibaba right now. A lot of you guys use Alibaba right now. Hold on, let me see if I can pin that. So a lot of you guys are using Alibaba at this particular moment. So that's a Chinese company, right? And you can buy stock in Alibaba or Baidu or NIO or there's a whole bunch of different, there's even the Chinese Netflix. I forgot the name of that particular company, but I was invested in all of them. And then what ended up happening, guys, a couple of years back is that the people that own these particular the CEOs of these companies, thank you for the heart me, Kimberly. The CEOs of these Chinese companies started making so much money. I'm talking about billions, like Jack Ma. They were making billions and billions of dollars. And the government was like, they ain't like that. They were making money in cryptocurrency. They were making money in these companies were becoming these billion-dollar mega cap companies. They were growing exponentially. And the Chinese government said, yo, ain't nobody bigger than the government. And they shut down everything. It literally happened in like a week. The government came out and was like, no company in China is going to be bigger, or no CEO is going to be bigger than the government. So we're just not going to allow these companies to do their thing the way that they've been doing it. And ever since then, guys, the companies plummeted in price. Alibaba at one point was battling Amazon as being, one of the largest companies on the planet. And now you can barely, I think the largest company, which is Alibaba, might be in the top maybe 30 or 40 of companies that are out there. Now, here's the thing. The common sense side of it was, look, China's economy arguably is bigger than ours. So if their economy is bigger than ours, that means that the companies that they're building over there should be bigger than the American companies. So investing in these particular companies, guys, wasn't it wasn't a gamble. It was almost intelligent and smart to do it. And a lot of investors like myself got into these companies as well. But when a government comes in and says, we are not going to help these companies make all of this money anymore. We don't care about your expansion into other countries. Like, they purely was making sure that the CEOs were not becoming so big and so powerful that they can make decisions in the country. And they stifled the growth of all companies. Like y'all think, and that's what happens in dictatorships, right? Like, they are gangsters. And they were like, we don't care that we don't have the biggest company on the planet. We don't care, because all we care about is making sure that the people that are running these companies are not bigger than the government. So a lot of investors lost a lot of money. So that was one of my big calls back in the day, because if you look at the chart, Chinese stocks were doing well for like 5, 6, 7 years. You were doing extremely well. And then all of a sudden, like in a couple of months, they plummeted and lost people a lot of money. And ever since then, I decided I'm never buying any company that's attached to a dictatorship, ever. Because I had to go through it. I had to go through the process and see how they deal with they're not like America. America is all for, everybody making as much as they possibly can. Thank you for the rising star, Mr. Jones. Okay. Right. You haven't met a gangster until you get into investing. Definitely. In China's they some gangsters over there. So I was like, I ain't never ever buying. So that's an honorable mention, right? So what's happening right now is it looks like the government decided they weren't going to make the what was happening underground was the government started stockpiling all types of commodities. So China owns more gold and silver and rare earth elements than any country on the planet, which is holding the United States, by the BSAC. Because we need those rare elements for AI. We need those rare elements for electric vehicles. We need that lithium. We need all of those precious metals to do a lot of the things that we're doing over here. So China and America, they're battling right now. But if you were in a company like a Baidu, it peaked at $354. It's now sitting at about $133. You would have lost about 60 of your portfolio. That's why it's important that you're not going all in all the time. Even if this only made up 20% of your portfolio, you still would have been able to recover by having 80% of your portfolio, maybe American companies. And it would have, and while this was hurting like this, you might not have been as profitable as everyone else was, but you would have been able to live, to trade, and invest another day. All right. So let me give you guys my list. Yeah, if I get a little bit angry, it's because I don't like to lose. So number 10, we're going to go from 10 to 1. All right. We're going to go from 10 to 1. So as bad as Snapchat was, oh, dang, I don't think I could say that. As bad as SNAP was as a company, guys, this list is going to get worse and worse until we get to number 1. So this is number 10 on my list as some of my terrible calls. And interestingly enough, guys, this isn't that hard. Like, this wasn't that bad of a call. Because if you're using common sense and you have kids, it's like, all right, there's not but so many platforms that's out there. You got FB that also controls IG. You got YT, right? You got Pinterest. So it's not even that many platforms that are out there. And now you have TikTok, right? So everybody should be doing well. If FB is a $1 trillion company, SNAP should at least be worth, what, 100 billion? Y'all notice SNAP is only worth like 10 or 15 billion dollars in size. It's worth like 1/100th of Meta, which is crazy because it used to be like that, dude. It was that company. It was that company that was battling Meta, right? You remember Zuckerberg was trying to buy them out, and they was like, "Why would we let you? If you want to buy us out," they gave them some obscene number to buy them out for. They were like, "We're gonna be bigger than you," and they should have just got bought out because the stock dropped 90%. Guys, the stock peaked at $83 and now it's sitting at $8. This is a stock that fell from grace, and I don't even know if they're gonna be able to recover. But there is something that I like in the charts. I do like what I see in the charts, and what I see in the charts, guys, is that it fell to a low. And look at that, guys, for like 2 or 3 years, it won't fall any lower. So maybe it's bottoming out so much that it can't do nothing but go up. That's why, so the things that are on my list that are 10, 9, and 8, they're probably companies that might turn around and end up being some of my best calls ever. So I'm even thinking about it, right? And every now and then you'll get that. Yeah, it's basing out. That's the word. We either call it basing or it's consolidating. Those are the stock market terms. Consolidation means that buyers and sellers are equal. So the buyers are not overpowering this company where the stock goes up, and the sellers aren't overpowering the stock where it goes down. That's a good thing. The longer that it bases, guys, they say the wider the space. Snap might be now think about this. Stock SNAP was an $80 stock that went down to $8. If it ever goes back to $80, guys, you make 10 times your money. That should be the goal. And it's not going to happen overnight. It took a year or two for it to go from its highs to its lows. So it's probably going to take another year or two to get from its lows to its highs if it can start getting back up in price. A $10,000 investment can be worth $100,000 maybe in 5 or 6 or 10 years. A $100,000 investment may be able to get you to that mill. But in my opinion, the only way you should be investing $100,000 is if you already got $1 million. Nobody should be investing $100,000 unless maybe they got 500 and they're using 20% of their portfolio. But to use your whole 401k that you've been, or IRA that you've been building for the last 10 years to put in this one company, thank you for the rising star, Mrs. Dante. That's foolishness. That's being ignorant. Actually, that's being ignorant. I tell people every day, I'm ignorant, but there's a difference between being ignorant and ignorant. Ignorant is just your personality. Like Joel just gonna be ignorant. Like if I go to the club, I'm popping bottles. I'm ignorant. I ain't gonna just be sitting in the corner. I'm gonna be like, give me a bottle and let's have some fun. I'm ignorant. If I buy a car, I ain't buying no simple basic car. It's gonna have something on it. It's gotta have something about it. Like if I'm gonna spend my money on it, it's gonna be that thing. I'm ignorant, but I'm also conservative. And I'm also not ignorant. If I'm going to be ignorant and buy this, that, and the other, I'm not going to spend all my money at the club. If I go to the club and I start popping bottles, it's probably 10% of what I made for the week. If I make $1,000, I'm not taking $1,000 to the club. That's being ignorant. But I can be ignorant in the club with $100. I'm just going to be balling on a budget. All right. You guys should have the same approach when you come into the market. All right. So Snap, SNAP, put it on your list. It might be turning around. Chinese stocks, they might be turning around. But at this particular point, they have been terrible calls in the last 10 years. I mean, look at that. When anything that drops 90%, guys, is a horrible call. My kids got a lot of it, but they have time for it to turn around. It might end up being the best investment they ever make. And it doesn't have to become the largest company on the planet for it to be their best investment. It just needs to grow 1,000 times or 100 times its value. You know, if Snap can go from, a $15 billion company to maybe a $300 billion, make 300 times your money. I think that's the math. You can do something with that. You get about $500 or $1,000 into it, and it grows even 30 times its value. That's what, $3,000. It grows 300 times its value. You can make a little something. This is how you do it, guys. I don't want to say you find these types of companies, but because it's in a space where companies grow like AI companies and social media companies, guys, are valued way higher or appraised way higher than other companies. Investors are willing to pay more for it. So keep that in mind. But yes, it was a terrible call. Let's look at number 9. Number 9 was Kava. In the comment section, if you've eaten at Kava, go ahead and put a yes in the comment section. If you've eaten at Kava, put a yes in the comment section. We don't want to get into your business. We just want to see, if people are these companies that we're investing in, we want to see if people are actually eating there. If I get nobody, then maybe it was because I just thought people were eating at Kava. See, Jim Babe says she loved Kava. You're the type of people we need to make this stock go up, Jim Babe. Jim Babe Apparel. Well, y'all ain't eating enough of it because that bad boy dropped from $172 to $58. And y'all are already on me about this company. Now, I'm not in this company. And here's the thing. Most of these companies that you guys see, thank you for the heart me. I'm not in. I'm more active than you are, but I'm not going off of what's in my portfolio. I'm going off of what's in your portfolio because you guys are not as active or have the discipline to get out like I did. Y'all saw my loser list. You remember when I pulled up my list and we went through it yesterday and the day before? Y'all saw the things that were negative in my account. It was only like 3 or 4 companies. I'm no longer in these companies. I'm doing this for you, so that y'all don't go on YouTube and say Joel Harrison, the guru. Let me talk about the 10 terrible stocks that he told me to buy. That's what y'all doing these days for clicks. So I just beat y'all to the punch. I'm like, I'll pull the M&M. I ain't show y'all what I was. These calls were terrible. Yep, even Pops, my golfing buddy, he was even like, man, Joel, I'm selling this terrible stock. I was like, hey man, get out. I'm so mad at the company, I won't even eat at the restaurant. But it dropped from $172 to $58. Terrible. Terrible. Great food is not doing well in this environment. A lot of people are saying it's because of the tariffs. And then some people are saying it's because of Biden. When we gonna stop blaming everything on Biden? I was what? Reason why was down. Man. It was W. Anyway, Kava, 172 to 58. Now, it doesn't mean that this company is going to zero. All right. It had hope. It's just going down at this particular time. But in my opinion, thank you for the heart me, glow with me. In my opinion, put a trend line on the top of this company. If it starts to break up to the upside, maybe take a shot at it. But I ain't taking a shot at it. I ain't even going to eat there no more. Like F Kava. I walk past Kava and I just roll my eyes and go and walk straight over to Shake Shack. All right, so that's number 9. I know you guys are like, these aren't even that bad. Have you seen my portfolio, Joe? I'm telling you guys, it gets worse. That's number 9. Let's talk about number 8. Number 8 is Rivian. Number 8 is, look, a lot of you guys bought Rivian. Now, I live in Georgia. So when I was in Georgia, I'm going to tell you guys why I bought Rivian, right? I was following Ford. Electric cars were very, very popular under the last administration. We had no idea who was going to be in office in the next administration. So during the Obama period during the Obama period, everything was all about electric, right? They were putting in the electric infrastructure. So I was seeing this with my own eyes. I was all on top of Tesla way back in 2016, 2018, which is why we made a killing in it, which is why we own two today. All right. But that's a whole nother story. So I could see the infrastructure that was placed. I owned about 3 or 4 electric vehicles at that particular time. I was involved in the space, so I understood it. A lot of you guys didn't. And I know that most people in the stock market world understands that there's always this saying that it wasn't the gold market that made everybody rich. It was the picks and the shovels that people got rich off of it. And that's the same thing when it came into the electric car space. It was the things that you have to put in place, like the lithium for the batteries, the electric charging stations, the different companies that were going to have to come together to make this thing work. It's where you were really going to get rich if you weren't able to get rich off of the pure companies. At the time, there was no electric truck that was out at the time. Tesla had just done what we call kind of like an IPO, where they drove a truck out and said, as much as you guys hate the Cybertruck set the stage for like the next 10 years. And there was so many orders that was placed on that truck. Elon literally changed the world just off of those Cybertruck orders. This ugly Cybertruck that everybody hates, because in that particular world, those orders meant something. Those orders meant like that. It was like earnest money, like, yo, like I'm actually interested in something that y'all didn't think that we were interested in. So everybody, you remember they were coming out with laws where they were going to change laws where every vehicle had to be dang near an electric vehicle like in the next 10 years. Now, since then, it's been overturned because you got a new administration in. But at the time, everything was all about electric. Rivian was working with Ford. So Rivian was just an idea. Ford was like, all right, we'll take your idea and we'll make this particular vehicle for you. Not only will we make this vehicle for you, we want to be invested in your company and we're going to guide you through this whole thing. Rivian IPO'd, guys. At the time, Ford was, I don't have the exact numbers. Let's just say Ford was worth 30 or 40 billion dollars. They basically built Rivian from the ground up, helped them get to where they were going. I've seen this just happen in real life. Imagine your son coming to you with an idea. They ain't got no money. They just got an idea. They're like, Pops, I need like $100,000 to create this idea. I got to get a patent on it. I got to make it live. And mind you, they never done any business ever in the history of them doing business. And as your pops, you're like, all right, I want to guide you through this. I want to make sure that everything's okay. I'm going to help you get this truck out there. You don't know anything about marketing. There's a whole big thing about marketing once this truck comes out. And then the day they IPO or the day that invention comes out, let's say your son make $1 million. And then your son is like, Daddy, you ain't ever made no $1 million, so you can't really tell me nothing. And Dad is like, look, don't get the big head. That $1 million was your investors that are backing you so that the company can be bigger. And don't forget, I still own a piece of your company. So even though you rising and you got a $1 million, some of that $1 million is mine. Remember that. Rivian was like, whatever, man. Rivian went out to Amazon, collected a whole bunch of orders, and literally was like, F you, Dad. You too old. You don't know the game. I'm going over here. We got more orders. Because Rivian ended up IPOing at $100 billion. Ford was only worth like 30 or 40 billion. So Rivian was like, we the captain. So Ford was like, all right, they took their money out of Rivian. And sure enough, Rivian didn't know what to do. Just like your son or daughter who gets the big head, got a little bit of money, think they know everything, and then you just got to watch them fail. And then you just sitting back like, do you need a loan? And now Rivian was supposed to build all of these different buildings in Georgia. So at the time, guys, I'm seeing all this $100 billion valuation. They supposed to be building all of these facilities in Georgia. Ain't no facility been built. Ain't nobody. I mean, if you've ever been in a Rivian, I got a lot of friends with them. They are wonderful vehicles. You can also throw Lucid in the mix too. Lucid and Rivian, terrible calls. But then once a new administration came in that wasn't even for electric vehicles and turning everything around, they were getting beat up before that even happened. So then when the new administration came in, it's no way for these companies to even catch a breath. Elon is having a hard time catching a breath. And that company is profitable as an electric car company. So can you imagine a company like this? So yeah, the stock IPO'd at $100 billion. That's now sitting at about, 10 billion or 9 billion. I don't know. You guys can check and tell me what the market cap is. Fell from grace. Bad call. But at the time, you got to understand what the mindset was when everybody was investing in it. And when things change, guys, when administrations change, when you see a change, when you see that they left Ford, this is the homework that you guys weren't doing, that I was doing. I'm not in Rivian, but it's not about me. It's a call. These calls are going off of how you guys approach the market, because y'all ain't going to do your homework. You're not going to fully go through it. You're just going to blame me or anybody that told you to buy this or whatever forum you went to and read about it. But I'm trying to show you guys that sometimes you have good reasoning to buy something, but things change. And if you're not checking on your companies, at least every quarter, things like this can happen, and you can still be sitting with Rivian in your portfolio. Now, if you're young and you can withstand the 10 or 15 or 20 years it might take for this company to turn around, maybe Ford comes back and buys them out, which would be hilarious to me if they join forces with Ford again. That would be like the funniest thing ever because of how Rivian treated Ford. Ford got them to the promised land, and then they basically was like, "F you, Ford." Like, I'm happy for Ford, but at the same time, Rivian is actually a great company. I don't really want to see companies fail, but those are one of those companies where y'all made some terrible decisions, and you hurt a lot of shareholders in the process. A lot of people lost a lot of money believing in your company. And it's just like a lot of you educators that are coming into this market. Just tell the truth. Tell everybody the truth about how much knowledge you have of the market. People will respect you more. I don't mind if every single person on here creates a digital whatever that they can create and put it out there to anybody, right? I don't care. I want everybody to win. Just, this is my journey. This is what I'm doing. This is what I'm doing. Don't come out the box talking about I'm the best. I'm the master guru, and then get angry at what I'm doing. Just tell the truth on your journey. People will respect, because people know they will respect you more. And that's how it was with Rivian. Everybody knew that Rivian was green, but they had the big head. So we'll see what happens with them. So Rivian was another one. Let's get to the next one. Number 7. Thank you for that rising star, Nick. What time is it? 7:11? All right. I was supposed to do it at the top of the hour. So quick break. Just make sure that you guys are going over here and taking care of my besties that are in this box right here. That are anyone that's grabbing these rising stars, make sure that you guys go in there and engage with them, because those are what we call quality engagers. They're supporting the room. They're allowing me to come on every day and give you guys this free content. I also want you guys to go over here and take care of my supporters in this particular box, even if you're tapping. I love my tappers. It doesn't cost you a dime to tap the screen for me to help push this room out to what we call the For You page. We push this out to the For You page. More people come into the room. We have over 600 people have come through the room so far. Even though that says 76 up there, over almost 600 people have come through the room, peeked in, maybe grabbed a couple of people, and then they rolled up out of there. All right. So anybody buy this one? All right. This one is interesting to me because I've seen a lot of gurus get in trouble for this one. This was almost common sense to buy. Just think about it. I want y'all to think about this. When Beyond Meat came out, Beyond Meat came out at the perfect time when everybody, especially your vegetarians, were finally convincing people like myself that these vegetarian burgers and sausages were actually good. Y'all know that when I go to Burger King, the only thing I order when I go to Burger King is an Impossible Whopper, and I'm not even a vegetarian. Now, I don't eat red meat except for lamb. And I eat the heck out of chicken and the heck out of fish. So I'm not like, by all means, I ain't no vegetarian. I just don't eat red meat. So I don't eat like burgers for say. I might eat 3 burgers a year. So when I want that burger taste, I'll go to Burger King and I'll order an Impossible Whopper. Now, why am I saying that? Because the Impossible Burger was created by Beyond Meat. Thank you for the heart me. When they came out, guys, there was no company that was able to break into the fast food space. And I'm not saying you couldn't go to a restaurant or a fast food place and get a vegetarian burger. I'm just saying the top companies, the Wendy's, the Burger Kings, the top, what we call the top tier market cap companies, they weren't involved with anybody. Thank you for the, who just sent me that rising star. Thank you, Tim. And thank you for the heart me. There was no company at that particular time, at least that I know of, that had broken into that space. Well, McDonald's was like, yo, Burger King and McDonald's was like, yo, we gonna use strictly Impossible burgers. And then I started going to Publix and Kroger, and I started seeing the Impossible burgers being sold in, packages where I bought those and brought them home. So it was only common sense because you're like, yo, this isn't a household name yet. They just got a contract to be in every McDonald's and every, Burger King in the nation. It's like the intelligent thing to buy that particular company. And the company spiked for a little bit. And then all of a sudden it plummeted. Plummet City. I saw so many gurus get in trouble for this one, including myself. Did anybody else buy this one? If you bought Beyond Meat also, put it in the comment section. No, I don't wanna brag, but I actually made money in this one. Y'all see that low? I bought Beyond Meat when it IPO'd. And I rolled it all the way up. And y'all see where it started to go red the second time? That's where I got out. And that was significantly higher than where it was when it IPO'd. But now the stock is lower. It's not lower than where it IPO'd at, but it's low. I was able to get out because I'm active. Not only am I active, I came into the room and said, guys, I'm out of Beyond Meat. Like, F this. I literally was like, F this company. Because y'all know how I get. I get emotional. Like, I ain't going to sugarcoat it. Like, when I get angry, I be like, F this. I ain't trying to deal with it. And I be mad at companies. When, like, if a company lose me money, I don't ever go back and buy it ever again. That's just how I am. Like, if you do me wrong, there ain't no coming back from it. Like, you're donezo. And I'm good with that. So I got out. I got me a nice little profit, and then I was out of it. I ain't even thinking about buying it again. But G said, how does a stock go to it can just go to a penny stock. Like investors pull their money. Investors will just pull their money. And here's the thing. It's not like Beyond Meat ain't still being used on an everyday basis. It's not like I can't still go to Burger King and get an Impossible Whopper. Isn't that crazy? Like, how can a company go from being, what was it, $230 to 86 cents? What? Some people say it's the time to buy. I'm like, this company might file for bankruptcy. Now, here's a real thing. If you own a stock and you hear that they're about to file for bankruptcy, that means your shares are going to be worthless. Y'all hear that? I had to learn the hard way. I didn't know that. I just thought if I own shares and there's a value in it, I should be able to. You thought it was going to be worth something. No, that's what bankruptcy protection does. It protects you. So be careful. If you hear a company's about to go bankrupt, like, get out. If you can, get into another company. That bad boy got a $384 million market cap now. Yeah, that's crazy. All the money they done freaking lost investors. But yes, this one's on everybody's list. You know who's the only person who said stay away from this company? Kramer. Kramer was the only one that was like, stay away from, he said stay away from Rivian, and he said stay away from Beyond. But y'all know I'm ignorant. I'm buying everything. I'm buying everything. If it's popular, I'm buying it. But I ain't putting all my money in it. I'm going to buy a little bit of it. There is no company, guys. There is no list of companies that didn't grow 1,000 or 2,000% that I didn't have a piece of. I don't like to miss out. But that's what's funny. I bought this one and made money on it. Y'all know I made money on it, even though it's a dud now, because I'm an active trader. All right. But yeah, that one was terrible. What's number 6? Y'all remember this one? A lot of people said they never even heard of this company until they talked to me. Now, let me tell you guys the basis behind this one. The time, I was all about e-commerce companies. And the market was all about e-commerce companies. Amazon had just come on the scene, and it was just terrorizing everything. Amazon was putting everybody out of business. It made Walmart stock drop for a minute. It just came on the scene, and then every other company, every other country started developing their own e-commerce type Amazon. China had Alibaba. The Latin America had Mercado Libre, right? You already had eBay, right? So you had all of these different e-commerce companies, and everybody started. You remember when everybody turned to the internet and we started having things delivered to us, and it basically changed our lives, right? And then Uber came on the scene, and then they started delivering. So at the time, Jumia was the Amazon of Africa. Because a huge thinking was Amazon. I mean, Africa's a pretty big continent. I also was thinking everybody needs to have something delivered to them. And I was like, hold up, they don't have any other e-commerce company in Africa, and this is gonna be the Amazon of Africa, and it had a market cap of like $1 billion. Are you kidding me? I'm not going all in, but I'm gonna put some money in this bad boy. Well, Jumia spiked twice. Y'all don't see the whole chart. Jumia started high, went low, spiked to $69, and then it lost dang near 99% of its value. Now, here's the thing. Here's the thing, guys. Jumia dropped from $69 to $1. Y'all know that bad boy just recently ran from $1 to 12? That's 10 times your money. That means a $1,000 investment's worth 10,000. A $10,000 investment worth 100,000. A $100 investment's worth 1,000. What? This is when it's turning around. But y'all know, y'all. What is my? What did I tell you guys I do? If a company does me dirty, it's almost impossible to get me to invest in it again. I don't care. You know how people are like, man, they broke up with me. I'm just going to get my life right and I'm going to show them I'm going to be really, really successful. Then they're going to see me and they're going to wish they were with me. Not Joe. Joe don't give a dang how successful you get. Because all I'm going to remember is how you treated me. I don't care. You can become the president. I'll be like, you old shady ass president. Don't trust them. I'll be with the, don't trust them. You do me wrong, I ain't buying you no more. F that. Get out of here. Fall off a cliff. Go fall in a hole. I don't care. You make some money on Jumia, fine. I'm done with Jumia. But what? It's got a 1.5. It's got a 1.5 billion dollar market cap. Guys, that's where you get rich. When companies go from 1 billion to like 10, that's when it goes from, if it ever got to $100 billion in market cap, guys, you just made 10,000% return. Is that right? 1 billion to 10 billion is what? 100%, no, 1,000% return. That bad boy gets to, 100 billion in size, which that's how big these e-commerce companies are getting. The Mercado Libres and the Alibabas, they're $100 billion companies. That's how you get rich, when you take a billion to 100 billion. Not when it's already a trillion, guys, and it's trying to go to what, 100 trillion? Thank you for the rising star, Mrs. Penny. So that's Jumia. Jumia can go fall in a hole. All right. Here's one. All right. Now, if my aunt is here, I apologize, guys. When I first came into the stock market, this was literally my first recommendation to my favorite 4 journeys. I hope she didn't buy any. This literally was the very first recommendation I ever made of a stock. And my aunt was over, and I was like, yeah, there's this company that's into, stem cell anti-aging called Geron. They were talking about it on TV. Now, here's the thing. At that particular time, I learned over the years that if I can't explain what a company can do in one sentence, I shouldn't be investing in it. And a lot of people, we think the opposite. We come into the market and we say, I should be investing in things that I don't understand because that's the reason why I'm not a millionaire. Because I need to invest in these things that make me feel a little bit uncomfortable. No. If you don't understand it, you're not going to understand the cycles. You're not going to know when to put your foot on the gas. You're not going to know when to take your foot off the gas. If you don't understand it, you shouldn't be investing in it. So I get it why a lot of people didn't invest in crypto. You didn't understand it. But that doesn't mean that you should knock it because you don't understand it. See, that's where I get angry. I get angry at the people that just knock something because they don't understand it. I didn't understand it. Telling everybody and their mama to buy this. First week into the market. I think it was the week after I got back from Indiana, after I took my stock market class. I thought I was a guru. Everybody needs to buy Geron. And that bad boy been going down ever since the day I recommended it. 90% of its portfolio. Sorry, Auntie. What you want? So yeah, Geron was terrible. I know what they do, but I know it was a bad call. And it's funny because I was all about Geron for about 3-4 months. It's a biotech company. Biotech companies, guys, are speculation companies where if they hit, you really want to treat them as trades and not investments. Like you invest in it until you wake up that day and they say they approve something, and then it's up like they'll be up 110, 120% in one day. Sell it on that day and then keep it moving. Because you see the spikes are crazy. And every time it spiked, that was it. And then it started to go down. Then it'll spike, then it'll go down, then it'll spike, and then it would go down. But if you bought it way at the top, those spikes don't mean nothing. It lost 90% of its value. This is another one that can go fall in a hole. I don't care if you just cured cancer, you can go fall in a hole, you and your mama. Because you lost. Now, here's one where I lost money. All right. That's a good question, why Trip 7. I see your question about the dividend, but you have to have a goal. When you come in here, everybody has a different style. So if we knew what your goal was, it's easier to answer that question on what type of dividend stock you want. Plus, we need to know what type of tolerance you have. Every stock there's 1,000 different dividend companies that are out there, right? So I can't just recommend. I used to just recommend when somebody asked a question like this. After doing thousands of consultations, I realized there's so many different ways we approach the market, and we're all in different positions. So it helps people like me when you guys give us more information regarding what you guys want to do with your money. And this isn't to get on you. It's just I'm teaching any and everybody how to communicate, not only in this room, but when you're talking to anybody that's in this financial space, because it helps you and it helps that person and viewers a lot better. I love the questions, though, especially with the dividends, because that's something that a lot of us are just now learning today. Here's one. Now, look. I know y'all remember this one. I came into the room and I was like, I want to support Black businesses. Now, where were y'all now? Now, we were supposed to be buying this stock on every Juneteenth. Every Juneteenth, we were supposed to be buying this stock. The word went out. I thought it was all on social media. On Juneteenth, we were all supposed to push this stock, and we all make money. And I was the only one in this mug, like, all right, guys, let's do this. Support. We're all together. Well, I can't say that word. We gonna make Wall Street see this company. And dump. Here's another one. Although I want to support you, you can go fall in a hole. No, y'all remember this one. Was it during COVID? Now, I normally don't just buy companies just to be buying them, but y'all know I will buy anything, right? The problem is I was pushing this mug. So this used to be called Radio One. All right, there's a financial arm of this also that goes and they do, it's no secret in America there was a lot of redlining that was occurring, in the financial system. So in the financial system, what's changing now is, that different banks are equally investing in certain areas. At one point, they weren't. There were like areas on the map where they would say we're not going to invest in those areas. Well, that's against the law. So a lot of these Black-owned companies, Black-owned banks were supposed to be created so that they can help financially position themselves where they can, so we can have equal opportunities, in real estate, or if you're in radio, if you're in all of these different particular spaces, right? And these were going to be some of the companies that help. And the word was, we were all going to invest. No, but the companies were going to get huge investments during, Juneteenth. And, we were going to educate the world in this particular space, but it just didn't work out. You can go research it and see everything else about it. But the stock went from $54 to $1. There you go for support. So it was a bad call. And it can go fall in a hole too. It's got a $47 million market cap. Now, like, what can you do with $47 million? Like what? What you can buy a couple, you can have a couple of people get some housing. Like, it's not enough money to be able to make a difference in the world. Now, this is the radio. There's a U1 and then there's a U1K. They're both terrible companies now. I say terrible companies, terrible stocks. No one wants to invest in them. Maybe they rise with the phoenix and become a different company in the future, but at least they, what they wanted to do was beneficial. It just didn't work out. So that's number 4. That's like we're going down 10, 9, 8, 7, 6, 5, 4. I keep telling you guys it gets worse and worse. Right. And I mean, this company don't even look like it's going to ever recover. That's the Juneteenth stock. Number 3, ChargePoint. I saw somebody earlier that had Plug Power. Now, what was the philosophy behind the ChargePoint? Well, guys, use ChargePoint. We have a ChargePoint device in our garage right now, and it is the best electric charger I've ever bought. And I mean, it's cool too. It like lights up, and it looks like this futuristic like thing that you put in your garage if you have an electric vehicle or you have a plug-in hybrid, which in my opinion, I think everyone should at least have a plug-in hybrid. If you don't know what a PHEV is, it's a car that runs the same way that your normal car runs. But then if you just want to put it in electric, you can. I think every single solitary vehicle should be a PHEV. It makes no sense to me that if you go to the grocery store or if you run up to the YMCA or if you run to the golf course that I have to use gas to do that. Like I should be able to go there, not use any gas, and only use my gas when I want to travel, 100 miles or more. Maybe we push in that particular direction. But whatever the case, if you have a ChargePoint electric charger in your garage, you'll be able to charge up not only your your electric vehicle, but you'll be able to charge your plug-in hybrid as well. So because I had one and remember, they were putting the infrastructure in place. I don't know if you guys noticed, but during the Obama administration, they made sure that you couldn't drive more than 15 minutes anywhere in America and not have access to a charging station. And for that, in every single solitary electric car business, like we have Georgia Power here, right? Whatever that electric company is in your city, there's not one in the whole city that you can't drive to and you're going to see electric chargers there. Like it was almost, what's the word I'm looking for? It was a mandate that they had to have it there. All right. So anyway, so if they're going to have it there, then common sense would tell you, okay, if they have that infrastructure in place, they're changing the way that you have to do your emissions. The emissions have to be lower. The world at that time was moving towards plug-in hybrids and electrics. And then everything just came to a halt. And companies like this that's not getting the funding that it needs from this administration, they're going to suffer. 8 years ago, you would have been able to say, you wouldn't have thought that this would, you would have said this wouldn't have happened in a million years. Like, why would they put billions, almost trillions of dollars into having a infrastructure in place for electric vehicles to just say in the future, we're not going to fund it anymore. We're going to change the whole world and then we're going to backtrack. So that's what happened. So all of these companies got hit. ChargePoint, Plug Power. There's a third one out there too. And, it's unfortunate because it doesn't mean that you can't go. Like, if you got an electric vehicle and you want to put a charging station in your garage, it's not like this isn't the company, the first 2 or 3 companies you're going to call. The companies are still going to run. They're just not the investors are just not putting the money in it so that it can grow. All right. They're just not putting the funding in it so it can grow. And these companies, this stock dropped from $989 to $7. That's crazy. A 98% drop. Again, I made money in this company. Oh, you said Correction Live? Oh, I see. You guys are y'all correcting me or correcting? I don't care if you guys correct me. I don't get offended by it. I speak in absolutes and I have the numbers wrong a lot. So make sure that you guys are fact checking me. I'm close to the answer, but I'm not going to always be 100%. All right. So make sure that you guys are fact checking with your GPTs. And I encourage you guys to do that. All right. Make sure that the correct information gets out there. Treat me like Trump. Say he really meant this, guys. God, Joe just be getting on my nerve. Just be spitting out the wrong information. Put the information in the comment section. Oh, EVGO. Yeah, that was another one. EVGO. Yep. So yeah. It's a terrible call. If you're in it still, then you definitely didn't check your portfolio or knew what was going on in the government space. And I don't even know if they ever are going to recover. All right, so be careful if you're in it. It happens though. But you see, guys, how it just went red and it just kept selling for years. A lot of you guys don't realize that some companies will sell off for years. When y'all don't see the 200-day or the 200-week moving average, but when them bad boys start to turn down, they can go down for years. Not just days, years, not just months, years. Ford has been going down for 22 years. Now, there have been times it popped in price, but overall from its all-time highs, Ford is nowhere near its all-time highs ever. It hit its all-time highs 20 years ago and ain't never been back. So be careful. All right, number 2. Now, guys, these last 2 are the only 2 companies I've ever owned in my life that ever went to zero. These companies actually went to zero. It's rare that it happens, but it happened to me because Joel will buy anything. So it was just a matter of time before I had a zero. Number 2. Everybody was all about the cannabis space. Ooh, America's gonna finally legalize cannabis. Hooray, hooray, hooray. How do we know this? Because look at what's happening in Canada. A lot of these companies started in Canada, and Canada legalized it. And these companies got so big that they were able to run. They seem legitimate. And I'm not saying this one is one as well. I'm just saying a lot of cannabis companies were. And then a lot of those Canadian companies started buying a lot of the American companies to make them legitimate or partnering up with them. So for years, we've been wanting this space to grow. I did a whole webinar on cannabis stocks. A whole webinar for like 2 months. For almost 2 months. Now, this was supposed to be the apple of the cannabis space. High-end, legitimate people working there, legitimate numbers at the time. Madman was supposed to be that cannabis store that when you walked in, you were gonna be like, oh my God, this is beautiful. Look at all the glass and all the different, like, my God. The type of place that Paris Hilton, not that she smoke, I shouldn't have thrown her name out there. I don't know if she does cannabis. I'm just saying her brand is like high end. The type of place that, I don't want to say Diddy either, because his name is like dirt now. But y'all know what I'm getting to. The type of place maybe Snoop will walk into and be like, ooh, I want to link up with you guys, or Martha Stewart, right? That's what Madman was supposed to be. Picture says, can a stock go to zero? You're looking at one that went to zero. It went to zero. Guys, this, and it went to zero. I was questioning. At any time was it going up? No. It only went down. It went from $7.50 a share to zero, to nothing, to nada, to out of here. Thank you for the rising star. Praise him. Boy went to zero. Got out before it got to, well, did I? It went to zero. All I know is I ain't make no money in it. I know for a fact the one that I'm about to show you next went to zero, because I still own I think 1 million shares of it. So I would say this is for like the whole cannabis space. There's only about 5 companies in the cannabis space even worth buying. Curaleaf is one. It's the #1 largest cannabis company on the planet, unless another company has taken over it since then, where I might be wrong. Trulieve is another one that's based out of Florida. Green Thumb is what Madmen was supposed to be. Innovative Properties, which is IIPR, I believe, is involved in the real estate side of it. And then I would say Canopy Growth. I know a lot of you guys were in Sandal, and these are just my favorite 5. Yeah, you got Tilray also. Mark, thank you for that. Thank you for the rising star, praise them. But that bad boy went to zero. A lot of the times when they go to zero, they file for bankruptcy. So that's why they get to zero, guys. They file for bankruptcy. Hold up, let me change my goal real quick. Thank you, guys. Let me change my live goal before we get to this last one. I'm going to try to get to some of you guys' stocks for the last 15 minutes. But let me change my goal real quick. Let me add. We'll add. Let me add some galaxies. That was a joke. All right. I haven't said howdy in a while. All right, cool. So that was Mad Men. So be careful if you're in that cannabis space. If you're going to buy, in my opinion, go with Curaleaf. All right. Now y'all going, yeah, they're traders. Thank you, Kale. Thank you, Tim Puri. But yeah, maybe Curaleaf go to zero too, and y'all will catch me on this thing again. Thank you, Yao 61. Last one. Everybody, I think, heard of this one, and it actually went to zero. I'm sitting in. I don't know why. I think I'm just in denial. But I got 1 million shares sitting in my account right now that's worth about, I think, $10 total, and I just won't sell it. I'm holding it, guys, because I'm waiting for a lawsuit or something to come out. Thank you for the confetti, Pops. But this last one, guys, is MoviePass. Y'all know I actually met the owners of MoviePass. Do y'all know the people that own MoviePass were two black folks? I say black folks. It was I I know one was a brother. I don't know if it was he and his wife or if it was he and a partner, but I met one of them and I didn't know they were black. I'm not here a movie pass. So the way movie pass is actually out now. The company filed for bankruptcy. Another company came in and bought them, and then I think it's called movie pass right now. Thank you guys for the cap. I think it's called movie pass again, but it's not the same shares that I own. So of course I'm hot because I got 1,000,000 shares. And I used to have that same thinking. I bought this so long ago, I wasn't even dealing with like market cap at the time. I was doing just like you guys. If this goes to $1 and I got 1,000,000 shares, I'm going to be a millionaire. That's why I laugh at this all the time. That's why I laugh at you guys when you think like that, because I used to think the same way. And I haven't sold those shares to this day. And it's funny because me and my wife, we both laugh about this one. We just kept upping the ante. It didn't cost us a lot of money, but we just kept buying more and more shares till we had like 1,000,000 shares. It wasn't worth $1,000,000. So MoviePass allowed you to go to AMC or Regal, and if you had this particular pass and you paid $10 or $15 a month, I think it was $25 a month, you were able to watch like 3 movies for free. It didn't include food, but you were able, it was a pass to go to the movies. And it came at a perfect time when movie prices started to increase in price. But it worked for a minute, and then the model just failed. It just failed. And then the company had to file for bankruptcy, and then it reinvented itself, and now it's still called MoviePass, but it's not under the same ticker. And because they filed for bankruptcy, anyone that had previous shares, it didn't matter. Those shares are literally worth zero. Look, C Spooner said, look, C Spooner, I'm sorry, I probably got you in that mug. And you see that, guys? That's when you know you got a for lifer, yo. When you when you recommend a stock and that mug go to zero, and then 10 years later they still rolling with you. Because they're not looking at the worst case, right? Every now and then, guys, we gonna get it wrong. But it's your job to be like, Joel, I don't trust this one, brother. I'm out. And I'm not gonna get offended. You guys gotta be a little bit more active in the companies that you guys are in. You can't just solely rely on us for everything. Not unless you're paying somebody to do it, right? I get it if you're paying somebody weekly or monthly and that's literally their job. But if you're getting free information and free recommendations, don't get angry if a stock, look, probably bought over 1,000 stocks, guys. And what, I showed you guys 10 bad ones. Well, these are 10 really bad ones. So 10 really bad ones out of 1,000 companies that I buy, I think that's a pretty good percentage. But a lot of you guys are not going to focus on the 990 stocks that I got right. You're going to focus on those 10. And then if any of those go to zero, then I'm the worst investor on the planet. Get out of here. Yeah, keep thinking that way. I also called NVIDIA and Tesla and Bitcoin and Netflix and Palantir and SoFi and on. I can go on and on and on and on some of these great calls that I have made for you guys over the years. But most of us are not going to focus on that. All right, I'm talking. Let's get to some of you guys' stocks. So I'm going to try to look at some of you guys' stocks in the next 10 minutes. I'm going to pull up charts. Let's look at some of you guys as losers, and let's see what's going on with them. Let's look at some of you guys as losers, and let's see if they may be turning around at this particular point. Give me some stocks. Somebody said LAC. LAC. All right, we'll look at LAC. Can somebody tell me what the market cap of LAC is? Because I can't pull it up here. LAC. You down with LAC? LAC. What's LAC? Oh, lithium. Oh, yeah, this is a bad one. Why is it going down in price? Because this administration don't give a dang about an electric vehicle. What do electric vehicles and AI need? They need lithium. And this is what's interesting. It needs lithium too. Boy, I remember a lot of people coming in telling everybody to buy lithium. I mean, I saw people taking lines of credit off their houses for options in lithium. And I kept saying, guys, the charts just don't look good. Like, as much as you guys are saying lithium is that thing, look at this. It went down in price for guys, this is 2022. Lithium has been going down. Now, here's something that's great. Lithium just recently started to break through its downtrend. It based out. It broke this trend, is shooting up in price, but you're going to get that. You're going to get price action. A lot of the times, guys, that's what we call a short squeeze. A lot of people that may be short on this, you'll get a nice little squeeze for 3 days. This bad boy went from $3 to $10, and now people are taking profit. When you see something move that fast and that hard in 3 days, a lot of the times you're not going to catch it, guys. It went from $3 to $10 in, that's 3 weeks. In 3 weeks, it's a long time. Stocks usually will trend for about 10 to 14 days. It trended for about 2 or 3 weeks, and then it came down in price. I would not get into this company until it spiked one more time, but the spikes are violent. So in my opinion, I wouldn't buy something like this because it's not predictable. I can't look at its charts and look at a pattern. The only pattern that I see is that when it spikes, you miss out on it. Unless you're able to catch it quickly on its 2-week move. So when it starts to move, it moves for about 2 weeks and then that's it. I would trade it as a 2-week trade. I don't necessarily know if this is the time to get in it as an investment. All right, let's look at another one. What's another one? You want to look at wait. Oh, okay. You guys are giving me a lot now. ADMA. ADMA. I don't know what the heck that is. Y'all are getting me with these. ADMA. Is this like a biotech company? Because biotech companies always. Hold on. Oh, there we go. Oh, thank you for did somebody just send me a cap? Appreciate it. ADMA went from $1 to $25 from 2022. I'm going to change the chart to a day chart. We're looking at a week chart. I know that's investments. Well, keep it on this chart just for today. We'll look at a day chart any other day. We spend too much time looking at a day chart anyway. So what I don't like about this is it has what we call a head and shoulders pattern. This is the head. This is the shoulder. And this is a shoulder, which is a very aggressive pattern that's literally the most bearish pattern in the stock market. So be careful. And it's starting to turn around. So if you're in this, guys, this might be going down to $14 because it just broke this trend. And it's just a matter of, it just broke this trend. And it did give you 3-4, guys, it went up for 4 weeks and now it's turning down. It went up for 4 weeks and now it's turning down. So if you got in on week 3 and 4, you were late anyway. I would wait until it starts to break back up before I get into it. All right. So be careful on this one. If you were to buy this one, you should have gotten in because this is a week chart. You should have got in on that very first week, that first green candle. You should have been in right here at the $17 level when it jumped to about $3 higher. You should have had a stop at $17. That's pretty advanced. If you're in it as an investment, then keep in it if you believe in it. Okay. All right. What's another one? I'm doing this on my own tonight. Adobe. I'm just going in order. All right, let's look at Adobe. Adobe. It would help if you guys gave me the ticker symbols. I know a lot of stocks, but every now and then. Now, in my opinion, guys, this isn't a terrible stock. Adobe has just come down in price, and we're sitting at what we call a support level. Y'all see that? All we did was come down to this line, and now it's bouncing off of that line. Adobe actually looks like a buy, but I'm not going to buy Adobe until we break this trend, which it looks like it's trying its best to do. It's trying its best. It did the 3 days above the line. That's 3 weeks above the line. Okay, so you might get a nice little push in Adobe. But if you're going to buy this as an investment, this is a very excellent area to buy this for a multi-year investment. As a trade, I don't know too much about that, but you know, let's look at CoreWeave, Denny. CoreWeave, guys, I was in this one. I'm out of it. All right, this was a bad call on my part. I made a little bit of money on it, and now I'm out. All right, I was buying it as a trade, so we're going to look at a chart. So if we were looking at it on a day chart, I saw this move here and it didn't stick. And that happens. I bought CoreWeave off of this move right here. We broke the trend. It went up 3 candles. That's when I'm supposed to buy. I'm supposed to buy right around here. Okay, right around the $85 area. Very good risk to reward. Even if you were looking at the day chart, you got a 513 cross. Hold on. Where is the 200? Where's the 200 day? Dang, I must have taken it off. Oh, you know what? This company just IPO'd, so it wouldn't have a 200 day yet. So yeah, as a trade, even though I was in on this trade, it did pretty good, right? Remember, you're looking for 10-day trends. So even when it started to go up on day 3, y'all see the third candle, it still went up for 4, 5, 6 candles, 7 candles, and then it turned around. That trade was over. I ended up breaking even on this particular trade. All right. But I was in by the third candle. I wasn't just buying it. And now we got a new move. But guys, these are 3 candles going down and it's red at the bottom. You need that green in there. You need this green to match the blue if you want it to go up in price. For you guys that are confused, you're just matching colors. Blue and green is the same. Red and red is the same. Blue and green is the same. Red and red is the same. And right now you got green and blue. They're going against each other. All right, SMCI. I get so many people to talk about this one. I told you guys to get out of this stock months ago and get into a better semiconductor company. But SMCI, what it did was it sold off so hard, everyone didn't want to take a loss. The 200-day moving average started to go down, guys, on SMCI November of 2024. I kept telling you guys over and over again, when that 200-day starts to angle down, you do not want to be around. Now, I get it. It started to go up again. And the moves to the upside were great. But a lot of you guys are getting in too early. Watch this. When the 200-day started to turn around, this was the perfect time to get in SMCI. Why? Because we hit this blue line. This blue line, which is what I teach on day 1. On day 2 or the first week of class, you guys learn about this blue line. If it's angled up, it increases your luck. If it's angled up, it increases your luck. So when it hit the blue line and went green, this was the easiest trade on earth. And not only did it give you 10 days, that bad boy gave you 20 days to make money. But then all of you guys are buying calls now. And I'm like, why are you buying calls now when the 200-day is angled down? It's because you guys are not looking at the 200-day. This bad boy is angled down. It's not angled up anymore. That means your moves are to the downside. You should be shorting this. That's why this move here was such a great move. It's not green yet. Stop trying to counter trend. If you're using counter trending tools, stop using them. They don't work. They never have. And there's no one here that can convince me otherwise. All right. All right, guys, I got to get out of here. Sorry. Thank you guys for coming in. Listen, tomorrow I'm going on early. So if people that left here early didn't get that message, I'm going on early tomorrow because it's New Year's Eve. I'm going on early. I'm going on at 4 o'clock to 6 o'clock. 4 o'clock to 6. 4 o'clock to 6. 4 o'clock to 6. 4 o'clock Eastern Standard Time to 6 o'clock. It's New Year's Eve. I'm not going to go live on New Year's Day. So the Millionaire Challenge, although it starts on January 1st, we're not going to have our first session until January the 2nd. Be there for the first day of class. I'm going to say that again, and I'm going to put out a post too. I'm going live tomorrow from 4 to 6. I'm not going live on New Year's Day. I'm going to rely on my friends.